Namaste, good morning. The session starts to focus on TDS, more importantly on TDS and also on TCS. We will have a small discussion. But as said, the amendment lectures takes care of all the amendments. Okay, I'm not discussing the amendments here because the amendment lecture by itself takes care of all amendments that are made and we have worked out solutions over there. My sincere feeling is only amendments are going to be questioned because both in TDS and TCS there are quite an amendment there for them to test. Okay, there are quite a lot of amendments to test, and if at all there is going to be a test on these things, it's going to be on a simple way. Okay, so the 8 marks which they focus upon, normally the marks is around almost 8 marks they focus upon in TDS and TCS. Okay, 6 to 8 marks we can easily score. Please refer to the amendment lectures about the new provisions so that you are more comfortable with it and more knowledgeable about it to answer the questions. Now here I am going to answer random questions from various provisions. Okay, more of theoretical answers so that you are clear about the provisions also. Right? We start with tax deduction at source. We start with TDS, tax deduction at source. Okay, so it is mandatory to deduct tax. We have studied in amendment about ESOP, when it has to be deducted tax. If tax is not deducted, when the employee has to pay the tax, the earliest of the events of 5 years, leaving employment, selling shares, okay, that we have seen in the amendment lectures, and dividend getting taxed from this year, we have seen with a threshold of 5,000 for individuals. Dividend getting taxed, we have seen. We also went ahead and saw the various amendments, small amendments in 194C, 194A, that is cooperative societies included, and while coming into the core sections, we saw the amendment of 194N, where for the past 3 years, if they have not filed their returns, then 20 lakhs becomes the limitation. More than 20 lakhs, you are supposed to get your cash withdrawals comes under taxation net. And more than 1 crore is for all people. It is coming under the net, but for them, the rates are different. We saw it in 194EN. Then we saw the 194O, the newly introduced section, which is more speaking about payments made by an operator, by an operator of e-commerce platform to a e-commerce participant. Okay, that 5 lakhs is the limit provided you give your PAN. Okay, so those things we have discussed in the amendments, which are of paramount importance, which are really very forward thinking, or which are going forward going to be the most key practical aspects. Now coming to some of the questions, we are going to take some random questions and discuss on TDS so that you will understand how to answer a question when it is there. Explain the TDS obligation in the following cases. Okay, I want to also ensure that COVID year rate of minus 25%. Okay, mostly it can be a theoretical question. Mostly it can be a theoretical question. If there is a practical question falling between 14th May 2020 and 31st March 2021, repeating 14th May 2020 and 31st March 2021, you can make a remark that the rate is slashed by 25%. But by the time you write the examination, those are not relevant. So I don't think they are going to test you on the COVID year rate. The test will be on the threshold limit. What is the threshold limit? What is the general rate? And if there are any special provisions for that particular section, that is going to be questioned, not anything else. Okay, he explained the TDS obligation in the following cases. 1. Trustworthy LLP pays interest of 75,000 to Indian Bank of a foreign branch. Okay, Indian branch of a foreign bank, and 60,000 interest on capital to the firm. Okay, not only section 194A, any of the sections, it is not applicable if the payment is made to bank or government. If the payment is made to bank or government, these sections are not applicable. Not only section 194A interest, generally itself, if payment is made to bank, these sections are not applicable. Okay, the wording that it is a foreign bank does not change the characteristic. Any bank, okay, even it can be Citibank, even it can be Bank of America if they have a branch in India, even it can be Bank of Saudis which they have the branches. Okay, the tax is not liable to be deducted, and also interest on capital is not covered in this section. Interest on capital is not covered under section 194A. It is only on interest on securities, interest on deposits, etc. Interest on capital is not covered under 194A. You can ask me interest on capital paid to a partner who is a non-resident. For that also 194A does not apply, 195 applies. Okay. Provisions of section 194A is not applicable for payment made to banks, that is interest paid made to bank, government, okay, both state and central. Okay, so the term bank will also include, okay, Indian branch of a foreign bank. Hence, assessee is not liable to deduct tax at source. Okay, when the first statement, banks and government is common, not only for 194A, any section they are common. Okay, section 194A covers interest on deposits and investments. Okay, interest on capital paid to a partner is not covered by this provision, hence not liable to be deducted. Hence not liable to be deducted. Okay, I am writing a tail piece answer. You need not write it in exam. If they specifically ask for, write it. Otherwise, for your understanding, I am writing it. Okay, in case of a non-resident partner, okay, tax is liable to be deducted for interest on capital under section 195 and not 194A. Okay, in case of a non-resident partner, yes, tax is liable to be deducted. Again, 194A does not say so. 194A is clear, whereas 195 says any other payment, royalty, fees for technical services, any other payments. So there you will be deducting for them at applicable rate. does manufacture according to the specification provided by the assessee constitute job work? Okay, according to the specification provided by the assessee, does it constitute job work where tax has to be deducted at source? Section 194C is the question. We all know that according to the specification, if it is manufactured, it is not liable to be deducted at source. If I want a t-shirt, if I want a shirt with the company's logo printed on it and I make an order, that is a specification and that is not liable to be deducted at source. When will job work come under deduction? If raw material is supplied by the customer. If raw material is supplied by the customer, and the Amendment Act of 2020 says not only the customer, by any person who is a relative of that customer as explained under 40A2, by any person who is a relative, subsidiary company, sister concerns, company under same management, company in which the director has substantial interest, partners, the firm giving the raw material, directors or partners in the firm, like that if you look at it, okay, all the relatives of the organization, if they supply raw material also and those raw materials are provided, in that case also I accept that tax has to be deducted at source. Otherwise, if the job worker himself purchases raw material, process it and supplies, it is pure sales. You just because it is as per the specification, it cannot be called as it cannot be called as job work, it is only as sales. Okay, on the question whether job work processing charges, okay, is liable under 194C, the answer depends on who supplies raw material. If raw material is supplied by customer, okay, or any relative of such customer as explained under 40A subsection 2. If raw material is supplied by customer or any relative, that what is in italics is amendment. Okay, if raw material is supplied by customer or any relative of such customer as explained in 40A subsection 2, tax is liable to be deducted. Okay, what the job worker does is mere processing. What the job worker does is mere processing. Okay, on the other hand, if job worker purchases raw material, process goods and provides to the customer, if job worker himself purchases goods, processes and provides to the customer, tax is not liable to be deducted as it is pure sales. Okay, goods might be supplied on a specification basis too. Okay, just because it is having a specification, I want like this, I want a customized goods like this, all these things are not the determining factor. The determining factor is who supplies raw material. The determining factor is who supplies raw material. Sunil Pratap deposits 18,000 per month in recurring deposit in Indian Bank Mylapore at 6% per annum. Okay, question number 3. Okay, recurring deposit per month is 18,000. Recurring deposit per month is 18,000. Okay, assumed to be deposited in the middle of every month. So on a year, it will be 18,000 into 12. In the year, it will be 18,000 into 12, 2,16,000. Interest at the rate of 6%. Interest at the rate of, okay, 6%. Okay, 2,16,000 into 6% into 6 by 12 on an average. Okay, on an average, it comes to 6,480. On an average, it comes to 6,480. The threshold limit for a bank is, in case of senior citizen, okay, 50,000, and in case of others, 40,000. So this is the threshold limit. Okay, since the interest is less than the threshold, okay, tax is not liable to be deducted. Okay, I take this opportunity to just tell you two or three more things. One, nowadays it is all branches of a particular bank because it is CBS linked, PAN based. So not only your branch, you have to see if the person has deposit in any other branch of your bank. So the threshold limit is measured not per branch, it is per bank. That is, all branches of a bank put together, it is being measured. The threshold limit is measured all branches, and all types of deposit come under except savings bank account. Savings, they don't call it as deposit. Okay, so the law uses the word time deposit. Time deposit means fixed deposit and recurring deposit. Savings deposit does not have a time limitation, it keeps on changing. So that's why savings bank account does not have the obligation. The bank is not obliged to deduct tax on savings bank's interest. Okay. Question number 4. Annalakshmi Hotel does not permit customers to directly tip the service providers, but collects it as a fixed percentage of bill and distributes the same to the employee. Okay, we all know we are hitting at a case law, ITC hotels. Okay, ITC hotels. Okay, what did that hotel do? They collected the tips from the customers and equitably distributed to all the service providers, all the people who are providing services on the table. So the question is, any payment made by the employer to an employee is subject to tax deducted at source, and will this fall under profit in lieu of salary? The Supreme Court held that merely the hotel acts as a collection agent. It is as if the customer has directly paid it to the bearer or to the service provider. The customer has directly paid to them. The hotel collecting and giving will not change the characteristic, and this income, this payment will not form part of salaries. Okay, ITC hotel, it was held that the hotel is merely collecting and distributing to service provider, providing people. Okay, uh, indirectly it is the customer who is paying the people. Hence, tax is not liable to be deducted at source. The assessee company, nothing but the hotel, okay, will not be held as assessee in default. Okay, it is understood that you are only acting as an agent, so you will not be treated as assessee in default. You are not liable to collect it and remit it. Okay, all the properties of Vijay Mallya has been seized by the government and now under High Court purview. High Court has ordered all income that needs to be paid to the assessee to be remitted to the High Court. assessee has made deposit with various banks. So, is the banks liable to deduct tax at source? They are. There is a dispute going on. So, High Court has ordered all the income, that is, all the interest income that are going to accrue, should be deposited with them. Is the bank liable to deduct tax at source? The answer in UCO Bank case. The answer in UCO Bank case said no, the assessee is not liable to deduct tax at source. Okay, this is just the interest payment and there is no tax liability for the same. Any payment made to government, etc., tax liability will not arise. This is just an interest payment. 1 minute, friends. UCO Bank. Due to legal dispute or on fixed deposit is made in the name of Registrar General of the Court. It was held by the High Court that the bank is not knowing the ultimate beneficiary, or in other words, ultimate beneficiary will be known only on after the dispute is resolved. So the bank is not liable to deduct tax at source. Okay, here even if the ultimate beneficiary is known also, these are more towards payment for government. You are paying only to the High Court, so there is no liability to deduct tax at source. Okay. Assessee, that is the bank, is not liable to deduct tax at source as payment to High Court in tax amounts to payment to government. Okay, so payment to High Court, an instrument of direct of government, it will not be. So you are not liable to deduct tax of source. How will the provision of tax deduction apply for winnings in kind? Winnings in kind. If the assessee fails to deduct, will the assessee be considered as assessee in default? Okay, question number 6. Okay, how will you, okay, TDS on winnings in kind. You win a Maruti car, you win a gold coin. In those circumstances, it is a victory. It is winnings. Okay, is tax liable to be deducted? Yes. The company has two options. That is, the provider of the gift has two options. There are two options available for the provider of winnings. Okay, either tax has to be collected from the winner and remitted, or winner has to provide proof of paying such taxes. Okay, right? There are two options available to the provider of the gift, provider of the winning. Okay, that either ensure that whatever is the tax, Maruti car, 11 lakhs is the value into 30%, 3,30,000 collected from him and remitted to the government, or ask him to give you a challan that 3,30,000 of tax has been remitted, or winner has to provide the proof of paying such taxes, then provide the article. So winnings in kind will also come under the taxation purview. Two provisions, remember, either tax has to be collected from the person to whom it is going to go, and it has to be remitted to the government account, or ensure that he provides you a proof not later. I'm not saying that submitting of income tax return. I'm saying before giving him that article, ask him to give the proof. Before giving him the car in our given example, ask him to provide the proof. In that cases, yes, fine, you need not. Okay. Now on the question, suppose sometimes the winners are also not known because hammam, dream home, or sometimes inside a pack they keep a small slip. They can just scratch the slip, go to the nearby shop, get it. Okay, in Hindustan Lever's case, okay, in Hindustan Lever's case, the law gave a small benefit. Okay, that is, assessee failed to deduct tax in respect of winnings which are only in kind can be deemed as assessee in default. Okay. Provisions of section 194B, that is winning, cast only the duty to deduct tax at source. Where the winnings in kind, there is nothing to deduct at all. The responsibility is to ensure that the winner of the prize money pays the tax before the winnings is released in favor. Where assessee fails to ensure the same, penalty get attracted, but 201, that is, assessee will not be taken as assessee in default. Hence, okay, so you will levy penalty, but you will not treat the assessee in default just because when what has been paid without deducting is different from, there is no point or there is no way I can deduct tax on this. Of course, I should have got the proof or I should have got the money. I accept. But this doesn't render me as assessee in default. So penalty gets levied and the assessee will not be considered as assessee in default. Okay. Where, okay, assessee fails to collect tax on winnings or fails to obtain proof, okay, in Hindustan Lever's case, it was held that penalty will be levied for such default, but section 201, which makes the assessee as default, is not applicable. So assessee will not be considered as assessee in default. Only penalty will be levied. Only penalty will be levied. Okay. Next question, concentrate to understand 194C, this transport operator in the implication. Before going to the question, I will tell you, transport operators, whether TDS is applicable. The answer is yes. 194C is the provision. Taxes liable to be deducted if the single payment exceeds 30,000 or the cumulative payment exceeds 1 lakh, tax is liable to be deducted. This is part A of our discussion. Part B of our discussion. Okay, is there an exemption? Yes, if there are two things. If the transport operator provides a declaration, that he don't own more than 10 vehicles and provides PAN, then tax is not liable to be deducted, whatever may be the quantum. Repeating, where the transport operator, resident transport operator, provides a declaration and is PAN, then tax is not liable to be deducted. Keep this in your mind, we will understand this question. Seashore India Limited, a shipping company, had paid 4 transport operators a sum of 2,50,000 each in the previous year. Transporter A has given proof of having less than 10 vehicles but fails to provide PAN. Transporter B has provided proof as well as PAN that he owns only 10 vehicles at the end of the year. Transporter C has more than 10 vehicles, so neither provides proof nor PAN. Transporter D just provides PAN. Compute TDS impact. Okay, right? Okay. Question number 7. Okay, how does this system work? First, the parent law. In case of goods transport operator, resident goods transport operator, okay, tax is liable to be deducted under section 194C. However, where the GTA provides and the proof means certificate that he doesn't own more than 10 vehicles, then tax is not liable to be deducted. Okay. In this background, let us understand this question. In this background, let us understand this question. Okay. Right. Transporter A gives proof but fails to provide PAN. Okay. Transporter A. Okay. Since PAN is not provided, tax is liable to be deducted at 20%. Since PAN is not provided, you have to provide both for getting the zero rate. If you, the fundamental law, the parent law is wherever PAN is not provided, the rate of taxation is 20%. Okay. So in this case, since PAN is not provided, tax is liable to be deducted at 20%. Okay. Okay, right? Transporter B. Transporter B. Okay. Then transporter B has provided proof as well as PAN. Okay. Since he has provided both uh, both declaration and PAN, tax is not liable to be deducted. As a value addition, I will tell you in this question, this is the answer. Okay, as provided that he does not own 10 vehicles at the end of the year. End of the year, at any time during the year. At any time during the year, not in the end of the year. During the year, you have 12 vehicles. You are not supposed to give that declaration. You are not supposed to give that declaration. That declaration is not going to say that I don't own 10 vehicles at the beginning of the year or end of the year. At any time during the year, I will not be owning more than 10 vehicles. That is the declaration. But anyhow, with regard to that value added answer is important only for 44AE, not here. Transporter C has more than 10 vehicles, so he neither provides proof nor PAN. PAN should have been provided. Okay, okay, PAN should have been provided. Transporter C. Declaration not provided. Tax is liable to be deducted at 1% or 2% as the case may be, depending upon is it an individual or other than individual HUF. However, in this case, PAN is also not provided, hence rate of deduction is 20%. Hence, rate of deduction is 20%. Since PAN is not provided, the rate of deduction is not just 1 or 2%, it becomes 20%. Okay. Transporter G just provides PAN, fine. Okay. Transporter E. Okay. Since PAN is provided, but declaration not provided, rate of deduction will be 1% or 2%. 1% in the case of individuals and HUF and 2% for other assessee as the case may be. Eighth question. Payment of 40,000 was made to Nandita in September 2020 without deducting tax at source. However, while making the next payment, 70,000 in Feb 2021, tax of 11,000, therefore 40 plus 70, okay, at 10% was deducted and remitted in April 2021. Is the assessee liable for any interest? If so, determine the quantum. Okay, where tax is liable to be deducted but not deducted, interest shall be 1% for every month or part thereof from the month in which tax is liable to be deducted till the month of actual deduction. Okay, where tax is liable to be deducted but you have not deducted, interest is 1% per month. Okay, interest is 1% per month or part thereof. Okay, part thereof means even one day will be taken as 1 month. From what date I will compute? From the month you are liable to deduct till the month you have actually deducted, this will be applicable. Where tax is deducted but not remitted, this is a further serious offense. That means government money is with you. Interest will be 1.5% for every month or part thereof. Okay, or part thereof from the month of deduction till the month of payment. Okay, from the month of deduction till the month, from the month of deduction. Why I am saying this is, suppose January TDS you are supposed to pay on or before Feb 7th. January TDS you are supposed to pay on or before Feb 7th. You don't pay. Interest will be computed from January itself, not from Feb. Interest will be computed from January itself, where tax is deducted but not remitted. Interest will be 1.5% from the month of deduction and not from the month in which you are liable to remit. From the month of deduction, you will be computing it. So here, 40,000 in September 2020 without deducting tax. September, October, November, December, Jan, Feb. 6 months for that 40,000 into 10%. Okay. Now, computation of interest. Computation of interest. Okay. Payment made in September 2020, 40,000. Tax liable to be deducted at 10%. 40,000 into 10%, 4,000. Okay. Tax actually deducted in Feb 2021. Number of months of default. Okay. September, October, November, December, Jan, February. 6 months. Okay. Therefore, interest will be 4,000 into 1% into 6 months. Repeating, 4,000 into 1% into 6 months. Examination tension la 40,000 la potradinga. 4,000 on the tax component you need to charge it. 4,000 into 1% into 6 months. Okay. Then in the month of Feb, she deducts 11,000. So she should have paid before March 7, but she is remitting only in April 21. Okay. Tax deducted in Feb 2021, 11,000. Liable to remit it on or before March 7th. Liable to remit it on or before March 7th. Actual remittance, okay, April. Okay, number of months of delay, okay, you will take Feb to April, Feb to April. Okay, so Feb, March, April, 3 months. Okay, therefore, interest, okay, it will be 11,000 into 1.5% into 3 months. Repeating, 11,000 into 1.5% into 3 months. Okay, total interest payable is 735. Total interest payable 735. Ninth, the policies of Mrs. Saraswati Manivannan and Mr. Manivannan matured in April 2020. Saraswati Manivannan had taken the policy in January 2011 for a sum of 10 lakhs on which she paid an annual premium of 2,40,000. Maturity value along with bonus is 11,50,000. Unfortunately, she did not provide a PAN to the insurance company. First, let's complete Mrs. Saraswati Manivannan. Okay, question number 9. Provisions of section 194DA. Provisions of section 194DA. Okay, to just recollect the provision, okay, to just recollect the provision where, okay, where the premium exceeds 20% of policy value if policy is taken on or before 31/3/2012 and 10% of policy value, okay, okay, 10% of policy value if policy is taken on or after 1st April 2012. Okay, where premium exceeds 20% or 10%, then maturity proceeds are subject to TDS. Then maturity proceeds are subject to TDS. Section 1010D says if it is not exceeding, it is exempt. So if it is exempt, no TDS. Where it exceeds 20% or 10%, then the maturity proceeds is subject to TDS. Threshold limit rupees 1 lakh. Threshold limit rupees 1 lakh of maturity value. Okay, threshold limit is for maturity value. TDS 5% of the difference between maturity value and policy or premium paid. Okay, premium paid will always match with policy value. Okay, 5% of the difference between, okay, which we call it as bonus. Okay, and our threshold limit is not for the bonus. Threshold limit is for the policy value. Okay, threshold limit is for the policy value. Now, with this background, Mrs. Saraswati. Okay, let us understand Mrs. Saraswati with this background. Okay, for a sum in she has taken it in January 2011. Okay, okay, policy taken in Jan 2011. Policy value, the question says 10 lakhs. Okay, 10 lakhs. Okay, premium 2,40,000. Okay, premium exceeds 20% of policy value. Premium exceeds 20% of policy value. Maturity proceeds 11 lakhs 50,000. Huh? Maturity proceeds 11 lakh 50,000. Okay, maturity proceeds 11 lakhs 50,000 less premium paid. Less premium paid always will match with the policy value. Okay, this is the bonus you get. This is the bonus you get. Okay, tax is normally liable to be deducted at 5%. In normal cases, tax is normally to be deducted 5% of this value. 5% of this value, tax is liable to be deducted. But unfortunately, what happens here is she has not provided PAN. She has not provided PAN. Since PAN is not provided, tax is deducted at the rate of 20%. Since PAN is not provided, tax deduction becomes 20%. Okay, right? So, taxes, while computing tax, you will compute on the bonus, the difference between maturity value and premium pay. Whereas, while computing the threshold limit, you will see what is the maturity value only. Okay. Mr. Manivannan, who attained the age of 60 in December 2018, had a policy in Jan 2015 for rupees 3 lakhs, paid a premium of 50,000. Okay, he receives 5 lakh 50,000. He receives 5 lakh 50,000. Now, Mr. Manivannan, policy taken in 2015. The value of policy is okay, has taken a policy for rupees 3 lakhs. Okay, okay, this is policy taken in 2015. Premium, okay, he is paying an annual premium of 50,000. Premium exceeds 10% of policy value. Premium exceeds 10% of policy value. Maturity proceeds 5 lakhs. Okay, 5 lakhs. Maturity profits 5 lakh 50,000. Okay, premium paid always it will match with the policy value. Premium paid 3 lakhs. The bonus component is 2,50,000. The bonus component is 2,50,000. Okay, tax is liable to be deducted at the rate of 5%. At the rate of 5% on such difference. So what is with the tax deduction? 2,50,000 into 5%. Okay, so tax is liable to be, in the case of 194D, look for two things. Maturity value should exceed the threshold limit, that you will look for. Second thing you should look for is 20% if it is on or before 31/3/2012, 10% on or after 1/4/2012. In that case, you will have this. In that case, you will have this. Fine, friends. Fine. Right. Discount provided to stamp vendors by the government. Discounted price, not sorry for the spelling mistake. Discounted price for airline operators. Okay. Question number 10. I am first speaking discount to, okay, discount to stamp vendors. Okay, I am talking about Ahmedabad Stamp Vendors Association. Okay, tax is not liable to be deducted at source. Okay, on this discount, it is more like a cash, okay, aspect. So tax is not liable to be deducted at source if stamp papers are sold at a discount. Stamp paper partakes the character of cash, so tax is not liable to be deducted at source. Okay, discounted sale of air ticket. This is a problem in Qatar Airways. This is a case in Qatar Airways. What happens? Okay, I don't know at what I gave him at a price to the agent. Okay, which has a minimum commission. Okay, and he can sell it at any price, but that price should not exceed the MMR. That is, that price should not exceed the maximum maximum price slab fixed. Okay, that should not exceed the maximum price slab. So in that case, I don't know at what price he has sold. If I know only, I can deduct. Okay, since I don't have the information, there is no liability to deduct tax. Qatar Airways, okay, tax needs to be deducted on the commission directly provided. In case air tickets are given at discount to agents, and the agent can sell it at any price, okay, then the airline operator is not aware of the commission or profit made by agent. In such cases, tax is not liable to be deducted at source. It is not practical. I cannot find it out from my records. Okay, I have just told him you can sell it at any price. Okay, maximum retail price MRP, except MRP, it cannot exceed MRP. So in that case, it is so. Okay, tax nathinathu MMR ne varudhu. Okay, right. A member of a cooperative bank who is a senior citizen. Member of a cooperative is paid interest on deposit 70,000. Any payment to a member by a cooperative society is not liable to deduct tax at source. அதுதான் மாத்திட்டோம் நாம இப்போ. Okay. Question number 11. Normally, any payment to a member by a cooperative society, okay, including bank, okay, is not liable for TDS. Okay, interest is for the deposit made and not because the person deposited is a member. The nature of payment differs. Okay, it is not paid to all members. It is paid to one who has kept the money deposited. So interest is for the deposit made and not because the person deposited is a member. Okay, interest is for deposit made. Hence, such interest will not take the character of payment made to members. Okay, taxes liable to be deducted. Taxes liable to be deducted Okay, threshold for senior citizen is rupees 50,000. Threshold for senior citizen is rupees 50,000. In the given case, it has exceeded rupees 50,000. Hence, tax is liable to be deducted at 10%. Hence, tax is liable to be deducted at 10%. Since it has exceeded 50,000, tax is liable to be deducted at 10%. Okay. Withdrawal of 50,000 from RPF. Withdrawal of rupees 50,000 from RPF by the assessee, whether it will and the assessee fails to furnish PAN. Please understand, it is also an unique case. Okay, but I will write the parent provision. Will withdrawal from PF be taxable? Okay, withdrawal from PF, okay, withdrawal from PF is taxable only if the amount is withdrawn by employee, only if the amount is withdrawn by the employee without completing 5 years of continuous service. Okay, he has to complete 5 years of continuous service, then PF withdrawals are exempt. But if he withdraws the amount within 5 years, then whatever withdrawal comes under taxation purview. However, the threshold limit is rupees 50,000. Okay, in the given case, okay, since the withdrawal has not exceeded the threshold, okay, tax is not liable to be deducted. Tax is not liable to be deducted. Okay, the threshold limit is 50,000. In this case, it has not exceeded the threshold, so tax is not liable to be deducted. But as an additional answer, I will give you where tax is liable to be deducted, where tax is liable to be deducted, but okay, but PAN not provided. Okay, rate of deduction is 30%, my dear friends. Rate of deduction in this case alone is 30%, not the normal 20%. Here, the rate of deduction is 30%. Next question. House property and agricultural land belonging to Rajiv and are sold to Prakash at a price of 60 lakhs and 51 lakhs when the stamp duty of the properties are 75 lakhs and 60 lakhs. When the stamp duty is 75 lakhs and 60 lakhs. Okay. Okay, what happens in these cases? What happens in these cases? We are under we are under the provisions of section 194 IA. We are under the provisions of section 194 IA. It is applicable for sale of immovable property other than agricultural land. It is applicable for, okay, section 194 IA is applicable for sale of immovable property other than agri land. Okay, the buyer while paying, okay, buyer is liable to deduct tax if the sale consideration exceeds rupees 50 lakhs. Buyer is liable to deduct tax if the sale consideration, my dear friends, if the sale consideration exceeds rupees 50 lakhs. Tax to be deducted at 1% of sale consideration. Tax to be deducted 1% of sale consideration. Buyer need not have TCS, TAN. Buyer need not have TAN. Okay, this being the provision. Now, house property and agricultural land belonging to Rajiv are sold to Prakash at a price of 60 and 51. Okay, Prakash is liable to deduct on house property, okay, 60 lakhs into 1%. However, tax is not liable to be deducted for agri land. For agri land, okay, for agri land, tax is not liable to be deducted. Okay, the actual stamp value, okay, you need not deduct on stamp value, but you know the overall provision. For Rajiv, the sale price will be actual consideration 110% of stamp value. If the actual stamp value exceeds 110%, then stamp value becomes the full value of consideration. For Prakash, inadequate consideration provisions are applicable. For Prakash, inadequate consideration provisions are applicable. So that part of it you are very much aware. I am not going into the details. Again, that 110% for inadequate. Here I'm answering only the TDS part. 14. Applicability of 194C or 194I in letting out of land with mobile towers. This is the judgment of Indus Towers. Okay. Okay. Refer Indus Towers. Okay. Let's go to that judgment. Okay. What is the significance of this case law? Now, ஒரு land I took it on lease. I erected a mobile tower, okay, and various mobile operators used that tower, and I collected rent. The department contended that, look, this is coming under 194I, lease of immovable property, so 10% has to be deducted. Assessee contended, no, it is a contractual obligation for me to give it to the mobile operators. Okay, so only 194C will come. Okay, the court gave a judgment, both of you are wrong. Okay, it is letting out only, but letting out of plant, machinery and equipment. What you are letting out is not land. What you are letting out is a service that you are providing in the form of mobile towers. So it comes under 194C. Fortunately, the rate is the same. Otherwise, it comes under mobile tower. Okay. Indus Tower. Payment made for use of passive infrastructure facilities such as mobile tower. Okay, High Court held the submission of the assessee that it is not renting is not correct. Similarly, the contention of the revenue that the transaction is primarily renting of land is also not correct. The underlying object of the arrangement was the use of machinery, plant and equipment, that is infrastructure, and it is incidental that it was necessary to house the equipment in some premises. So the tower has to be in a land. That doesn't mean you are letting out land. Hence 194 rate of letting out of plant, machinery and equipment is applicable. Okay, rate applicable is 194I. Section applicable is 194I, but the rate is not 10%. The rate is only 2%. The rate is only 2%. That is the subject matter of this judgment. Okay. Divya and Lalita co-own a house property which has been let out for a total rent of 40,000 per month. Both have equal rights in the property. I am coming to the question of section 194I. Okay, section 194I is the threshold limit for the asset, that is the property let out, or is the threshold limit per owner? That is what I am trying to answer in from the various case laws and circulars. Contraband case laws, it was held that it is per owner. The threshold, if there are joint owners, each owner, or if for single owner it exceeds 2,40,000, then tax is liable to be deducted at source. Otherwise, it is not liable to be deducted at source. It is also a judgment in SBI, sorry, Senior Manager SBI, where the shares of each co-owner is definite and ascertainable. They cannot be assessed as AOP. The income of property is to be assessed in the hands of the owners. Hence, the threshold limit mentioned in section 194I has to be seen separately for each owner. Okay, the threshold limit has to be measured equal, okay, for separately for each owner. So, in the case of question number 15, question number 15, okay, in the case of question number 15, threshold of rupees 2,40,000 under section 194I has to be okay, has to be measured for every owner. Okay, it is not for total, is it for every owner? In the given case, if the shares are equal, then each co-owner is okay. In the given case, if the shares are equal, so 40,000 is the rent, 20,000 per person. If the shares are, then each co-owner is not having income exceeding threshold. Okay, hence tax is not liable to be deducted at source. Hence, tax is not liable to be deducted at source. The each co-owner is not having the total payment exceeding the threshold. Tax is not liable to be deducted at source, 40,000 per month. Tax is not liable to be deducted at source. 16th question. Swiss Airways enters into an agreement with Madras Airport Authority for landing and parking. Enormous time. This has been explained. The case has been questioned many times. Japan Airlines, Singapore Airlines. Okay. The Supreme Court judgment is what you are letting out is not just the land area. What you are providing is a facility. The facility is for multiple things. The facility is not just for land. The facility includes, okay, takeoff, landing, maintenance of aircraft. Okay, like that there are various services provided by the airport authority. So the payment received is not partaking the character of 194I, that is rent. The payment received is holistic in nature, The Supreme Court observed that the charges levied on air traffic includes landing, lighting, approach and aerodrome charges, aircraft parking charges, hangar charges, passenger service charges, etc. Thus, when the airline pay for these charges, treating such charges as charges for use of land will tantamount to simplistic approach, which is not the reality, which is far from the reality. Substance behind such charges has to be considered, keeping in view the full and larger pictures in mind. Hence, it cannot be treated as rent within the meaning of 194I. Okay, this is a Supreme Court judgment. Enough time it has been questioned. Okay. If they question, write it as it is, okay, as to what it will come under 194C. Okay, refer Japan Airlines / Singapore Airlines. Okay, refer Japan Airlines / Singapore Airlines. Okay, in those cases, it has been made. The threshold limit of 194J is 30,000, which covers fees for tech professional services and technical service. Is this totally 30,000 or 30,000 per service? It is 30,000 per service. Till 1920, there was at least some dispute on this. From 2021, there is no dispute on this because the law itself has segregated from the rate perspective itself. Pure technical service without involving any professional work is only 2%. Call center 2%. Royalty for film exhibition 2%. Professionals 30%. Directors sitting fees, professionals 10%, director sitting fees 10%, other royalties 10%. For each one they have separately mentioned the threshold. Director sitting fees does not have any threshold. Right from rupee 1 it is taxable. For all others, each one. So it is service based. Okay, it is service based and not the total payment per person. Idukku 194 ICO continuously I'll answer those two questions. That is the difference. So in the case of question number 17, okay, threshold under section 194J is service based and not recipient based. Okay, it can be the same recipient for two different services. Threshold will be measured separately. Okay, technical service will have a separate threshold and professional, and if the same person offers professional service, then the threshold will be measured separately. Okay, for both the technical and the professional you will, and now the rates are also different, so no more it is a bigger question. Okay, now you have to remember pure technical service 2%, that can be the questions. Pure technical service 2%, pure professional service 10%. Okay, or technical service even with a professional hand 10%. Okay, in all the cases 30,000 is the threshold. Separately director sitting fees no threshold. Okay, whereas 194I is different. It is not service based, it is recipient based. House rent payable to a landlord per month is 22,000. House rent payable to a landlord is 22,000 and maintenance charges is 4,000. Is there a tax liability to be deducted? Okay, is there a tax liability to deduct tax? Will your answer change if 4,000 is paid for furniture hire charges to the same landlord? My answer will not change. Okay, in whatever name you give, okay, if it is for the same person and it exceeds the threshold, in whatever 194J, the threshold is service based and not recipient based. 194I, the threshold is recipient based and not service based. Yeah, okay, not service based. Okay. Okay, threshold of rupees 2,40,000 is recipient based and not service based. Okay, threshold of 2,40,000 is a receiver and it is not service based. Threshold of 2,40,000 is recipient based and not service based. Okay, if for the same person rent for various items slash maintenance charges are paid, then the total payment will be considered for TDS. The total payment, not for per service, 194J service based, 194I recipient based. It is if the total payment exceeds 2,40,000, if the total payment exceeds 2,40,000, then tax is liable to be deducted. Okay. Payment of 5 lakhs by a company to a even Pingu Events Company Limited for organization of a debate competition. This question came long back in our examination, maybe 4 years, 5 years, okay, and still remains in our material. In this question, they have answered that event management will fall under 194C and not 194J. In this particular question, they have answered at that time that event management is not a professional activity, it is a contractual obligation, okay, to manage the event and give, so it will fall under 194C and not 194J. Event management is a contractual obligation and not a professional activity. Hence, section 194C is applicable, not 194J. Okay, it is case to case basis. It can be determined in the practical world. That's how I believe that you people are doing. Profit commission of 1 lakh paid by reinsurance company to the insurer company after the expiry of term of insurance where there is no claim for treating. Okay, reinsurance commission, okay, generally itself, okay, this is not coming under TDS purview. Okay, normally commission, if it exceeds 15,000, 5% insurance commission is also, that is only for insurance company paying commission to agent. Insurance company paying commission to another insurance company, which is popularly known as reinsurance commission. Which is popularly known as reinsurance. One company insures themselves with another company, which is popularly known as reinsurance commission. That is not coming under the TDS net. That is not coming under the TDS net, my dear friends. Okay, that is specifically excluded by a circular. Okay, question number 20. Insurance commission paid to an agent. Insurance commission paid to an agent is liable for TDS. Insurance commission paid to an agent, my dear friends, is liable for TDS. However, where commission is paid on reinsurance, it can be profit commission or anything, it is popularly known as reinsurance commission. Okay, then it is not liable to, it is not liable under 194. Okay, it is not liable under 194G. 194G. Okay, it is not liable under 194G, even though it exceeds the threshold limit. Even though it exceeds the threshold limit, it is not liable, my dear friends. It is not liable. 21. KD a part-time director was paid 2,25,000 as fees, which was actually in the nature of commission on sales for the period. Okay, right? Question number 21. I am answering it from two perspectives, that is section 192 and section 194J. Okay, remuneration paid to a director is liable to be, okay, is liable under section 192. Okay, tax is liable to be deducted under section 192. Section 194J specifies that any payment to a director which is not covered under 192 will fall under 194J. Adnalda sitting fees come under 194J. Why sitting fees comes under 194J is there, it is not covered under 192. So section 194J specifies that any payment made to a director which is not covered under section 192, which is not falling under section 192, will fall under section 194J. Okay. If the commission paid, the sales commission paid, is not falling under employment obligations, okay, then tax is liable to be deducted under 194J at 10%. In the given question, if the sales commission is not falling under any employment obligation, then we have to deduct tax under section 194J at 10%. We have to deduct tax under section 194J at 10%. Okay. If it falls, oh, I'm just writing and keeping, if it falls under 194J, okay, threshold limit, so that somewhere I recorded, threshold limit is nil. Okay, is nil. Right from rupee 1, it is taxable. Right from rupee 1, it is taxable. 22nd question. Karthik, residing in a rented property for which he claims HRA benefit, pays a rent of 60,000 per month to the owner of the property. Pays a rent of 60,000 towards owner of the property. This, my dear friends, falls under section 194 IB. This payment, my dear friends, falls under the provisions of section 194 IB. Okay, what is that particular section saying? Okay, if the threshold limit is 50,000, the threshold limit is 50,000 per month, and tax is liable to be deducted only in the last month of the year or last month of tenancy, whichever is earlier. Suppose you vacate it in the month of December. Otherwise, you are liable to deduct only the tax in the month of March. No TAN requirement. Okay. So, question number 22. Okay. Provisions of section 194 IB. Threshold limit 50,000 per month. Okay, 50,000 per month. Oh, okay, tax is liable to be deducted. Okay, either in the last month of the year or last month of tenancy, whichever is earlier. Either in the last month of the year or last month of tenancy, if last month is of tenancy is earlier deducted. Okay, rate of deduction 5%. If PAN is not provided, 20%. However, it cannot exceed the last month's rent. Now coming to this, okay, rent paid by Karthik. Rent paid by Karthik is 60,000 per month. Okay, 60,000 per month. So per annum it will be 60,000 into 12, 7,20,000. Okay, tax to be deducted in the month of March. Okay, tax to be deducted in the month of March 21 for our examination. Taxes to be deducted in the month of March 21, 7,20,000 into 5%, 36,000. Okay, so what happens in the month of March? In March, okay, Karthik will pay to government. Okay, Karthik will pay to government 36,000. Okay, Karthik will pay to the owner, okay, the landlord, 60 minus 36,000, 24,000, 24,000. Suppose I'm just giving you a value added answer. Suppose in the examination they ask you, okay, suppose landlord has not provided PAN, then deduction is 20%. So what happens? 7,20,000 into 20%, 144. Since the tax to be deducted exceeds 1 month rent, okay, the law specifies that rent of last month will become TDS. So you need to just deduct 60,000, okay, rent of the month, since, okay, since the tax to be deducted exceeds, my dear friends, since the tax to be deducted exceeds 1 month rent, since the tax to be deducted exceeds 1 month rent, the law gives us a small relief. Whatever is the last month rent, whatever is the last month rent, let that become TDS. Okay, whatever is the last month rent, let that become TDS. 23rd question. Transaction charges paid to members for fully availing, okay, automated online trading facility. Automated online trading facility. We are coming to this Kotak Securities case law. We are coming to this Kotak Securities case law. Okay, online trading facility. Okay, it is a software or it is a particular methodology by which I get it from BSE or NSE or the SEBI regulations. Okay. Now, should I deduct tax at 10%, treating it as professional services because it involves lot of the court held this is not a specialized service given for you alone. They have not developed this only for you. They have developed it and kept. Whoever pays the charges, whoever pays the fees, they will be able to get the benefit out of it. So it is not a personalized service like audit, like lawyers, like okay, various other things. It cannot be treated as personalized services. Kotak Securities Limited. So the law said 194J 194C only. Services provided by the stock exchange are available to all members. There is no exclusivity in the services rendered by the stock exchange to each and every member. Okay, and every member has to avail such services in the normal course of its trading in stock exchange. Hence, the Supreme Court held that services provided by BSE failed to satisfy the specialized or exclusive nature of the receiver. Therefore, they are not technical services but facilities, hence 194J. Now, even if you consider it as technical without professional, 2% only. Okay, so no issues. But still, this is a very nice judgment where we understood that services should be of professional, I mean, specialized in nature. Sivaram books an apartment for 47 lakh 50,000. For other amenities provided, he is liable to pay 5 lakhs, properly modular kitchen, special painting, something like that. The builder is of the opinion that tax is not liable to be deducted at source as the apartment cost has not exceeded 50 lakhs. So, the question now in front of the law was, okay, what is, because the threshold limit is 50 lakhs. The consideration for the apartment is only 47 lakh 50,000. For other specialized amenities which the person asked, he wants in his house some modular kitchen, some special painting, something for which he has charged the extra 5 lakhs. So, should tax be liable to be deducted? Finance Act 2019 clarified, yes, tax has to be deducted. The term consideration or the term turnover includes all payment made by the buyer and not just a payment for apartment alone. The term turnover or the term consideration means all payment made by the buyer. So, the total exceeds 4750 plus 5 lakh, 52 lakh 50,000, which exceeds 50 lakhs. So, liable to be deducted at source. Section 194 IA. Section 194 IA. Okay. Tax is liable to be deducted at 1% if the consideration exceeds rupees 50 lakhs. If the consideration exceeds 50 lakhs, the term consideration means all payment made by the buyer to the seller. It will include payment for amenities, common area, okay, facilities, etc. It will include everything, not only for your apartment, you pay for everything. Okay, in the given case, the total payment, that is 47.50 plus 5.00, okay, exceeds the threshold. Hence, the buyer, okay, Shivaram, the buyer is liable to deduct at 1% of 52.50. Hence, the buyer is liable to deduct tax at the rate of 1% on 52 lakhs 50,000. Okay, yes, tax is liable to be deducted, okay, on such payments. Okay, now Mudra Atco. Mudra Atco, an advertising company, has retained a sum of 15 lakhs towards charges for procuring and canvassing advertisement from a payment of 1 crore due to Cloud TV, a television channel, and remitted the balance 85 lakhs to the television channel. would the provision of TDS under section 194H be attracted on the sum of this 15 lakhs? Repeating, friends, how does this television industry or other industry, media industry work? That is, I book an advertisement. I go to Saravana stores, get an advertisement. The Saravana stores, I being the advertising agent's company, Saravana stores pays me 1 crore. I need not pay the entire 1 crore to Sun TV or any of the Vijay TV. I will retain my commission of 15% and pay 85 lakhs. Is this 15 lakhs subject to TDS? There was a circular of the department. There was a circular of the department which says that this is a principal to principal contract. There was a circular of the department which said that this is a principal to principal contract. This is not a commission. Okay, it is a charges which they have retained and paid, so no tax needs to be deducted at source on that. However, that circular now stands overruled by a Supreme Court judgment. That circular now stands overruled by a Supreme Court judgment in Prachar Bharati case. That circular now stands overruled, okay, by a Supreme Court judgment, my dear friends. Applicability of TDS in respect of amount retained by the advertising agency out of the remittance of sale proceeds for airtime purchase from Doordarshan and sold, held by Supreme Court. Definition of commission or brokerage is inclusive and covers any payment received directly or indirectly by a person acting on behalf of another person. Okay, right? So they are, the circular said principal to principal contract. They said no, you is an agent. Payment received or receivable directly or indirectly by a person acting on behalf of another person for services rendered. The agreement itself uses the word commission in all the clauses. The relationship is an agency relationship. It is held that the amount retained by the advertising agency is commission and TDS under section 194H will get attracted. And TDS under section 194H will get attracted till the financial year, till this judgment is 19. Till that time, there was a circular which said that it is a principal to principal transaction. But Supreme Court has said no. He is acting on behalf of you and he becomes your agent only. Okay? And it is a pure agency. Just because he retains, it doesn't mean it is not a commission. You yourself call it as advertising commission. So, it will be coming under section 194H. It will be coming under section 194H. Question number 25. Okay. Refer Prachar Bharati judgment. Okay. It's a Supreme Court judgment. Please be cautious. Answers of questions are more if it is Supreme Court judgment. Okay. Right. Moon TV, a television channel, made 50 lakhs, made payment of 50 lakhs to a production house for production of program for telecasting as per the specification given by the channel. The copyright of the program is also transferred to Moon TV. Would such payment be liable under 194C? Also examine the provision of tax deduction under source under 194C would get attracted if the payment was made for acquisition of rights of the content already produced by the production house. Fortunately, now this has been amended. any exhibition, etc., it is now only 2%. Till last year, it was 10%. Now, acquisition, buying, leasing, or exhibition of any films, etc., will come under 2%. But let us go to the primary question. This is similar to our raw material supply. This is similar to our raw material supply, where the television company gives you the money, tells what content they want as per the specification given by the channel. Okay, you just produce and give, it will fall under 194C. You just produce and give, it will fall under a contractual obligation. Whereas the television company approaches you and tells that you have a shelf content, I will buy it. It will come under 194J. But fortunately, now this is 2%, so no more these cases are going to be a disputable issue. Okay, but previously it was a disputable issue, because if you buy a shelf content, the rate was different. If you buy an already existing content, if you buy a specific content, the rate was coming under 194C. Okay. Where the television channel approaches the production house for producing content as per the specifications, and also pays for getting the content, then it will fall under 194C. The agreement is purely contractual in nature. The agreement is purely contractual in nature. On the other hand, where the television channel approaches the production house to get an already produced content, then it will fall under 194J. Okay, because the production house has worked as a professional, it will fall under 194J. However, under the amended law, the rate under 194J is also 2%. Under the amended law, the rate under 194J for such exhibition, etc. and all is also 2%. So no more there is going to be a bigger dispute on that. Okay, thanks to that amendment. 27. Messrs. Cool Sip Limited entered into an agreement for warehousing of its product with the Top Store Warehousing and deducted tax under 194C out of the warehousing charges paid in the financial year. The AO, while completing the assessment for the relevant assessment year, treated the warehousing charges as rent as defined under 194I and asked the company to make the payment of difference amount of TDS with interest. It was submitted by the company that the recipient has already paid the tax on the entire amount of warehousing charges, and therefore now the difference amount of TDS cannot be recovered. However, it will make the payment of interest on the difference TDS. Examine critically the context of the provision contained as to the correctness of the submission of company. The company is correct. Okay, where proof has been submitted by the receiver that the income on which you are liable to be deducting tax has not been deducted or deducted at a wrong rate, where proof has been submitted. Okay, please understand, where proof has been submitted, that itself is sufficient. Where proof has been submitted, that itself is sufficient. Okay? Hence, there is no issue. But again, you need not deduct it. But the assessee is liable to pay interest till the date of he has filed the return, which also the assessee is agreeing. So the company is correct. The company is correct in its contention. Question number 27. Question number 27. Okay. Company is liable to deduct under 194I. No doubt about it. Company wrongly deducted under 194C. So it is a lesser rate scenario. Okay. The receiver has considered the entire amount received as income and paid the due taxes, submits proof of the same. Assessee company is not liable to deduct tax as the receiver has paid the taxes. Okay. However, assessee company is liable to pay interest till the date of receiver filing his return. Okay, assessee company has to pay interest till the date of receiver filing his return. Okay, in the given circumstance, if Coolsip Limited pays interest, it is sufficient compliance of the procedure. Even in PGBP chapter, we have seen that 30% will be disallowed in the year in which you have not deducted tax and will be allowed in the year in which the recipient submits proof. So there is no question of again deducting. It is sufficient compliance. 28th question. AKL Limited, a third-party administrator on behalf of an insurance company, has settled medical bills of 5 lakhs committed by K hospitals for patient under a cashless scheme. Okay. Question number 28. Okay. The third-party operator is liable to deduct tax under section 194J. The third party operator, now every insurance company is having a third party operator to go through that bill, everything. Okay, the third party operator is liable to deduct tax under section 194J. He is liable to deduct tax under section 194J for payment made to the hospital, because it is a professional service and the third party operator is liable to deduct tax under 194J. Okay. 29. Call center. Okay. Call center services are falling under section 194J. Okay. Threshold limit is 30,000. One benefit they have given is rate of deduction 2%. Call centers are now only liable, okay, if you are paying to a call center, If a company is paying to a call center, no doubt it is a professional service. We have lot of call centers now. You receive calls in the mobile for on behalf of various company. It is not the company which is calling. They enjoy a third party call center. They employ a third party call center for making these calls. Okay, for the call center the company pays. This is not liable under 194C. It is liable under 194J because it's a professional service. Fortunately, Finance Act 2018 itself has said that it is coming under professional service, but the rate should be 2% only. Okay. Okay. Question number 30 is my focus on 194M. Okay, question number 30 is my focus on section 194M. Let me give you a brief of that section. To whom that section is applicable? For individuals and HUF who are not covered under 194C, 194H, 194J. Can I repeat? It is applicable for individuals and HUF who are not covered under 194C, 194H and 194M. That leads us to a question. Who are the individuals who are not covered under 194C, H and M? Individuals and HUF whose gross turnover does not exceed 1 crore or gross receipts does not exceed 50 lakhs are not covered under these three sections. Now, I am opening out to a larger extent and trying to make you understand this. I am an individual who is carrying on business, whose turnover exceeds 1 crore. I am covered under 194C for my business payments, not for my personal payment. For my personal payment, I am a person not covered under 194C. Even though, okay, I am trying to help you understand the circumstances. I am an individual who is falling under 44AB, more than 1 crore. I am making any business payment, contractual payment, 194C takes care. I am constructing my residential house. Can I go to 194C? No. But 194M will cover because 194M is applicable wherever 194C is not applicable. 194M is applicable wherever 194C is applicable to me, but not for this type of payment, either as an assessee or for the payment. If 194C, H, J are not applicable, 194M will be applicable. Second circumstance, I am a business person. My turnover is less than 1 crore. 194C is not applicable. 194M becomes applicable. I am not at all a business assessee. I am just a salaried assessee. 194C is not applicable. 194M is. Wherever 194C is not applicable, you should not understand. For all assessees whose turnover exceeds 1 crore, 194M is not applicable. Appadi illa. For all assessees whose turnover is exceeds 1 crore, but 194C is not applicable. When? If the payment is not of business nature. Then also 194M will become applicable. So, 194M is applicable wherever 194C, 194J, 194H are not applicable. Okay, having this in background, shall I? Okay, this section is applicable for individuals and HUF 194C, 194H and 194J are not applicable. Threshold limit 50 lakhs. Threshold limit 50 lakhs. Rate of deduction 1%. Rate of deduction 1%. Now, Bhimraj is an individual. He makes the following payment to resident consultants or to a contractor for works contract or to a resident by way of commission and brokerage. Amount of payment 27 lakhs on August 10th and 26 lakhs on November 22. The following situations are examined. He is a businessman. His books are audited every year under section 44AB. Payment to consultant or contractor or broker is for business purposes. Don't worry, 194C if it is contractor, 194H if it is commission, 194J if it is consultant, it is applicable. Okay. Scenario 1. Okay. These are business payments. These are business payments. Okay. For consultant, 194J is applicable. These are business payments and assessee okay, is subject to audit. Okay. For contractor, 194C is applicable. For okay, middleman, 194H is applicable. Okay. These are contractual obligation. In these cases, these are applicable. He is a businessman. His books are not audited in the immediately preceding financial year as the turnover is less than 1 crore. Payment to a consultant or broker is for business purposes. Now, since 194C, H and I are not applicable, J are not applicable, 194M becomes applicable. Okay. Scenario 2, business payment, but assessee is not liable to audit. Okay. For all payments, 194M will be applicable. Of course, individually, I will see the threshold, all these things, but 194M becomes applicable. Why? Because 194M applies wherever 194C, J, H are not applicable. So, in this circumstance, even though it is a business payment, but since 194C, J and H are not applicable, 194M comes into play. Payment to a consultant or contract is of for personal nature. Okay. Scenario 3. Okay. Payment non-business. The payment itself is non-business. The payment itself is non-business. 194M is applicable. 194M becomes applicable for all non-business payment. Even though it is a tax audit case, for all non-business payment, 194C, J, H will not be applicable. M is only applicable. Bhimraj is a non-resident Indian or foreign citizen. He does not have any income in India. Okay. Scenario 4 and 5. Okay. This provision is applicable for all individuals and HUF, okay, who are not covered under other sections, who are not covered under even an non-resident or even an agriculturist making payment in excess of threshold is covered in this provision. For them also this is applicable. So there is no question of just because he is a non-resident or just because he is an agriculturist, he cannot. His income might be exempt, but here I am talking about a payment in excess of 50 lakhs. I am giving you a very high threshold. So it will be coming under TDS. So to understand 194M, 194M is applicable wherever the 194C, J and H are not applicable. If you understand like that, it will be easier. Okay, right? So 194N, 194O are covered in the amendment lectures. Similarly, dividend payments are covered in the amendment lecture. Okay, majority of the case laws I have repeated. Majority of the sections of 194, main provisions of 194 A, C, B winnings, okay, and DA, insurance, commission, professionals, okay, rent are covered by us, including 194 IA and IB are covered by us. This is more than sufficient. The questions will keep revolving around this arena only. The questions will not go out, but be it whatever may be the 2021 examinations, there are sufficient amendments to question both in TDS and TCS. So the questions can come only from amendments. Okay, right? We take a small break. Okay, we take a small break. I'm going into the next arena again. Again, I am very confident that the question is going to be from the two amendments. 206C, 1G, that Forex for foreign remittances, tour package programs. Okay, for tour package programs, there is no threshold limit, whereas for others, 7 lakhs is the threshold limit. You have to deduct TCS, you have to collect TCS. Whereas for education, more than 7 lakh, it is just 0.5% you have to collect it. Okay, and also the 206 1H, 206C 1H, where more than 50 lakhs, if you are selling, the consideration is received, you are going to deduct tax and collect tax at source. So those two being the major amendment, those two being the major amendment, the possibility of question in those areas are higher and the other areas are, because maximum 6 to 8 marks for even whichever examination you are writing. Okay, so please remember that is the more questionable area than the other things. Here I am not covering the amendments. What are all the consequences of not collecting TCS in respect of sale of scrap by manufacturing company? State the circumstances in which TCS provisions are not applicable. Well, the interest is similar to whatever you saw in TDS. Thus, interest is very similar to whatever you saw in TDS. If you are not collecting TCS, you are liable to pay interest. I'll answer the second question once. State the circumstances under which TCS provisions are not applicable. Under in which circumstance can I say TCS is not applicable, especially by way of sale of scrap? If the scrap is reusable, if the scrap, scrap that means it is not known as scrap. The prior shipping or case law way irukum namakku. Okay, right? Priya Blue Industries Private Limited. Ship being broken, the scrap that is sold is reusable. Should tax be deducted or collected? Supreme Court held that tax is not liable to be collected. Where the parts can be reused, then it cannot be known as scrap. Scrap means you should throw it off. Where the parts can be reused, where it is reusable, you cannot regard it as scrap. Okay, right? So, in order to save time, I'm just pasting the answer. Okay, okay, I'm just pasting the answer because we have we know what it is. Okay, TCS is not applicable where the scrap is reused. Okay, where TCS has to be collected but the assessee fails to collect, then the assessee will be treated as default, the same interest of 1% like TDS, the same interest of 1% like TDS. Okay, in order to save time, I'm just, instead of typing, I'm just taking the answer. Okay, okay, here you refer to the case law also, though it is not manufacturing, but still refer to Priya Blue Industries Private Limited. Priya Blue Industries Private Limited. Okay, Priya Blue Industries Private Limited, where they said that it is not at all a scrap when it is reused. That even though it is for shipping, but you can understand it for scrap as a whole. As a whole. Okay, now. A partnership firm makes sale of timber which is procured and obtained under forest lease. We all know, okay, anything of a forest lease, tendu, timber, or any production of forest lease, okay, when you sell it, you are liable to collect tax at source. You are liable to collect tax at source. Okay, tax to be collected at 2.5% of sale value, not only for if you think it is only for sale of timber, no, it is also for tendu leaves. Okay, it is also for tendu leaves, it is also for any other forest product, it is also for any other forest product. In the amendment material, in the TCS part, in the first page, I have given you the rates. Okay, that will be for all forest product, 2.5% needs to be collected. All forest product, 2.5% needs to be collected. Okay, I'll paste the answer, just your understanding. H Limited, a manufacturer of luxury cars, sold 50 cars to its dealer. Each car cost 20 lakhs. Okay. 206 1C is not applicable, whereas 206 1H will be applicable. Till last year, the answer was 206 1C is not applicable. 206 1C is for dealer or the company selling to the customer. 206 1C is for dealer or customer dealer or company selling directly to customer. If the consideration exceeds 10 lakhs, tax has to be collected at source. If a company sells it to a dealer, 2061C are not applicable. But from this year, this answer will undergo a change. Okay? If it is 19/2020, no problem. From 1/10/2020, okay, 50 cars into 20 lakhs, 50 cars into 20 lakhs will go up to 10 crores, and tax is liable to be collected at source under 206C 1H 0.1%. Okay, under 206C 1H. So I will though I'm going to paste the answer from there here. Question number 3. For the financial year 2021, 206C 1H will be applicable from 1st October 2020. If the whole consideration is received before this date, then no TCS, either under 206 1C or 1H, where consideration is received on or after 1st October 2020, the value of consideration will get attracted under 1H. Okay, so it will not be attracted under 1C. So 1H is applicable. If 194M, whatever I told you, 1H is applicable wherever 1C is not applicable. Wherever 1C is not applicable. Reusable scrap, same judgment only. When it is reusable, it is not known as scrap. Okay, when it is reusable, it is not known as scrap. Question 4. Okay, refer Priya Blue Industries. Okay, when it is reusable, it is not scrap. Lease of whole plaza. Yes, it is now coming under TCS. 2061C, it is now coming under TCS. Okay, okay. Tax is liable to be collected at 2%. In the case of lease of toll plaza, tax is liable to be collected at 2%. Okay, parking lot and toll plaza are now covered under TCS provision. So tax, I will paste the answer. Okay, so tax is liable to be collected at 2%. Okay, in this scrap the repeated question. Once this forest and lease has come once, but scrap is the repeated question. Having said this, as I told you, since there is an amendment, the possibility of questioning the amendment is more and not anything else. That's a possibility. I'm nowhere predicting the question paper. I cannot, I don't also. Okay. I'm not a astrologer here. I'm just trying to travel with the examiner's mindset and try to understand What type of question? If you and I are examiners, we will always question on amendments because that will have a long-standing impact and that will be better to be questioned. Okay, with this, we are ending our TDS TCS discussion. But one thing I can tell you, the possibility of question is sure 6 to 8 marks. Try to sweep the entire 6 to 8 marks. Okay. Okay, amendment lecture plus whatever we have done here is more than sufficient for you to go and fetch those marks. Okay, now I am going into the next arena, advanced tax and mandatory interest provisions. Advanced tax and mandatory interest provisions. We all know that the advance tax has to be paid. Okay, advance tax has to be paid in 4 installments. Okay, 15th June, on or before 15th June, on or before 15th September, on or before 15th December, on or before 15th March. Repeating, on or before 15th June, 15% of tax due. The term tax due means total tax minus TDS is known as tax due. 15th June, 15th September, 15th December and 15th March. 15, 45, 75, 100 minus the previous installment paid. That is the advance tax payable. Who need not pay advance tax? Senior citizens who does not have business income. Senior citizens who does not have business income need not pay advance tax. If your tax is only 10,000, the tax due is only 10,000, you are not liable to pay advance tax. You need not pay advance tax. For people who are opting for presumptive computation, only the last installment of advance tax is becoming payable. For people opting for presumptive taxation, only the last installment of advance tax becomes payable. Now I go back to one of the questions we did in PGBP. Now I go back to one of the questions we did in PGBP, where we computed up to the tax, that presumptive taxation question, where we computed up to the tax component. We computed up to the tax component. Okay. We computed up to total income 27,44,000. This is question number 7. This is question number 7 of our PGBP chapter, which we did on the first session of revision. Okay, question number 7. Here is the question. Okay, compute his income and tax payable. Assume he has not paid any advance tax and ready to file the return by June 21. In this question, we computed the income under presumptive basis. We computed the income under presumptive basis and stopped in our PGBP chapter. The income comes to, okay, on presumptive basis, if the income came to 27,44,000. I am going to complete the question now, taking this as an opportunity. Okay, now in our TCS we will take care of this. Now in our okay, question number 7 of PGBP chapter, PGBP revision. Okay, total income computed is 27,44,000. there are no special incomes. He has only three types of business, that is a retail business, professional receipt, and plying of goods vehicle, and we gave him the deduction for 80 EEB. So total income 27,44,000. From here I start the question. I continue the solution. Computation of tax. Computation of tax. Tax on total income. Okay, we all know 27,44,000 minus 10 lakhs into 30% plus 1,12,500. Okay, 17,44,000 into 30% plus 1,12,500, and HEC at the rate of 4%, and HEC at the rate of 4%. Total tax payable, 6,61,128. 6,61,128. Okay, and he has not paid any advance tax. Okay, there is no TDS also. Add interest. Okay, add interest. 234A not applicable because filed within due date. Okay, filed within due date, so not applicable. 234B. Okay, and he should have paid at least 90% of his tax as advance tax. 90%, but he has not paid anything. Okay, from April to June at 1%. From April to June at 1% into 1% into April, May, June. He is filing in the month of June. Okay, 3. Okay, into 3. Okay, into 3 months. Okay, then 234C. Since assessee opts for presumptive computation, okay, only the last installment of advance tax is liable to be paid. Okay, he is not liable to pay the other installments. He is liable to pay only the last installment. Since that is not paid, interest is for 1 month. Only for the month of March the interest will come. This into 1% into 1 month. This into 1% into 1 month. Okay, 234 F, fees for late filing not applicable. He has filed within the due date, not applicable. Total tax and interest payable. Total tax and interest payable will be, okay, $6,87,573. So, interest is becoming payable if you are not paid advance tax under 234B and C. B, almost for all assessees, okay, 1% starting from April till the date you are paying the taxes. 234C, only for assessees who are getting presumptive computation the last installment. For all other assessees, 4 installment. Wherever advance tax is not applicable, like 10,000, senior citizen not having business income, interest will not come. (34E). For the quarter ending December 31st, 2020, the statement of TDS under Section 200 was filed on 25th March 2020. The total tax to be deducted in the quarter is 75,000. What is the interest assessee is liable to pay? Is there any way of avoiding it? Okay, this is 234E. That is, if you have not filed your electronic TDS returns. If you have not filed your electronic TDS returns. Okay. Question on 234E. ETDS returns has to be filed within 1 month from the end of the quarter. From the end of the quarter. For the quarter ending 31st December, ETDS returns has to be filed on or before 31st January. Where it is not filed, then 234E interest will be applicable. Okay, right? Interest is rupees 200 per day of default. It is a continuous offense. In income tax law, we call it as continuous offense. Okay, it is rupees 200 per day of default, payable till the date, okay, returns are filed. However, the total interest cannot exceed the TDS. Okay, interest cannot exceed. If the TDS payable itself is 100 rupees only, you cannot charge 200 into 10 days, only the 100 rupees. But in this case, let us come to it. In this case, okay, due date of filing 31st Jan, actual date of filing, okay, 25th March, number of days of delay, okay, 28 days in Feb and 25 days in March. 28 days in Feb, okay, and 25 days in March, 53 days. Number of days of delay, 28 days in Feb and 25 days in March. Okay, therefore, interest payable, okay, at rupees 200 per day is, my dear friends, 53 into 200, 10,600. 10,600. Okay, interest has not exceeded the tax of rupees 75,000. Okay, since interest has not exceeded 75,000, so 10,600 is the interest payable, rupees 200 per day, commencing from the date immediately after the due date and ending with the date of filing. The total interest cannot exceed the TDS payable. 234A. How will interest under 234A will be computed? Section 234A. What is 234A? Interest for delayed filing of a return. That is, if return is filed after due date mentioned in 139 subsection 1, interest shall be 1% for every month or part thereof. Even one day will be taken as 1 month. Even one day will be taken as 1 month. Interest will be computed on final tax payable. Okay, final tax payable. Adula da interest. Okay, the total tax payable less TDS credit less advance tax paid. Okay, so you will get the final tax payable. Interest will be computed 1% on that fine. So if that is 0, 234A will not come. அதனால்தான் 234F 5,000 up to December, beyond December 10,000. That is 234F. 234A as a percentage. If there is no tax due, there is no interest. If there is no final tax payable, there is no interest under 234A. There is no interest under 234A. So it is computed, it is payable only if there is tax payable, final tax payable, and you file the return beyond due date. How will interest under 234B will be computed? How will interest under 234B will be computed? Please listen. Okay, if at least 90% of the tax due should have been paid before 31st March. If you have not paid 90%, then 234B arises. If you have paid 90%, nothing. If you have not paid 90%, 234B arises on the final tax payable 1% per month or part thereof from April till the date of actual payment. From April till the date of actual payment, you are liable to do it. You are liable to pay it. Okay. In the 234B takes a different shape also. That is, if you are asked to pay tax demanded, 30 days kulla pay pannum. If you have not paid, 234B will come. So I will read out the theory for you, but be sure that this I will paste it. Okay. 234B. Interest will be computed if at least 90% of the advance tax is not paid within 31st March. Interest will be 1% commencing from 1st April till the month of payment, where income is increased in assessment. Then the date of payment of tax demanded, you should have paid it because your income is increased within 1 month. You are supposed to pay, otherwise you will pay. Where assessment made on an application made to settlement commission, ipo kadayadu, adnala you need not worry about it. From 1st April of such assessment year till the date of making application, where settlement commission has increased the amount. So whenever there is an increase in tax, maybe by the assessing officer, maybe by the commissioner, maybe by the settlement commission, maybe under the new faceless assessment, you will continue to pay 234B. You will continue to pay 234B. Okay, please understand, 234B is liable to be paid if you have not paid 90% as advance tax. Nama questionable area la the 90% now. Okay, as a provision I have given you the settlement commission etc. But questionable area is this 90%. when will 234C not be applicable? Wherever advance tax is not payable, 234C is not applicable. When advance tax is not payable, 10,000 not applicable. A senior citizen having business income, not having business income, not applicable. I'll give you two intricate cases apart from this. Normally, in the first installment, assessee is liable to pay 15% of tax due. Normally, in the first installment, assessee is liable to pay 15% of tax due. If there is a shortfall, on that shortfall, you will compute interest. But for the first two installment, they give a small relief. 15 and 45 you should have paid. But if you pay at least 12% and 36%, if you have paid at least 12% and 36%, no problem, interest need not be paid under 234C. Once more, when 234C is not applicable, if there is no advance tax liability, less than 10,000 the total tax payable or tax due. Second, senior citizens not having business income, presumptive computation only the last installment. In these cases, 234C are not applicable. In all other cases, applicable. One small benefit, because I know that you cannot estimate with accuracy that 15% and 45%. So the law says, if at least 12% in the 234B and 90% sonamari, if at least 12% is paid in the first installment or 36% in the second installment, 234C will not arise. 234C will not arise. So again, I'm copying this. Okay, my dear friends, I'm copying this and just reading out the theory so that we are saving some time. At the same time, we are understanding where 12% is paid for installment falling due on 15th June and 36% on 15th September, it is not applicable. Where in the case of presumptive computation, the interest of first 3 quarters will not be applicable even if advance tax is not paid. In case of senior citizens who does not have business income, in case of capital gains, winnings and dividend, under the interest dividend ipo kadayadu. The interest before they are accruing is not aware because you cannot predict it. You need to, if it is accruing before, suppose I get the capital gain only on 1st December. Now don't ask me to pay 15th June and 15th September installment because capital gain so winning so predict panna mudiyadu. You cannot predict, so it can be only prospectively and not retrospectively. So in these 4 cases, 234C is not applicable. In this 4 cases, 234C, okay, the first is an intricate case, the others are cases which are well known to us. $234D. What is interest under 234D? What is interest under 234D? It is interesting. Probably you would not have seen in practical also. The department gave refund on the basis of your return filed. The department gave refund. But later they understand that they have erroneously given the refund. You are not eligible for the refund because your taxes are high. They erroneously gave the refund. Now they will collect back the refund from you along with the interest of 0.5%. Along with the interest of 0.5% from the date it is granted. from the date it is given to you. Okay, along with the okay, it is interesting to understand what is 234D interest, where refund is offered as per processing of return under 143(1) prima facie adjustment, but later assessment made under எல்லாமே இப்ப faceless assessment வச்சுக்கலாமே, but later assessment made, it is identified that the refund offered is in excess of what it needs to be provided, then AO shall raise a demand ordering the excess refund to be refunded in the name of tax payable. Assessee is liable to pay interest at the rate of 0.5% for every month or part thereof on the whole of the excess money refunded from the month of return till the month of assessment order. Yes sir, assessment order kapram 234B. Okay, so this is a interesting section where from the month you are given refund, they have erroneously given you refund. Okay, they have erroneously given you refund, where refund is given, but later it is identified that you are not eligible for that refund. Then they will get the money from you. They will get the money from you. Okay, as tax. You have to pay the money along with 0.5% interest. 0.5% interest. Okay, because it is an erroneous appeal by itself. AO issued notice under 156 for payment of rupees 15 lakhs towards income tax liability on 1st October. Within what date the same has to be paid? 30 days. Within 30 days. If not, what is the interest obligation? Subsequently, in the appeal process, the demand is reduced to 12 lakh. Should fresh demand order be issued? If in case the demand is increased to 20 lakhs, what it is? Okay, right? I will answer you this question. இதெல்லாம் ஒரு வாட்டி எக்ஸாம்ல எப்பயோ கேட்டிருக்காங்க. So let us be clear. Interest on assessment. Where assessment is completed, order is served along with demand notice. Now, even if it is faceless order, the tax demanded should be paid. Okay, should be paid within 30 days of service of demand order. Within 30 days, you have to pay. Where it is not paid within 30 days, the 234B interest mari, okay, interest of 1% for every month or part thereof becomes payable for the delay. Okay, for the delay, you need to pay interest at the rate of 1% for every month or part thereof. Okay, where assessee has gone on an appeal, then the demand might be stayed. In the appeal process, where the demanded amount is reduced, in the appeal process, suppose if the demand is reduced, then the same order will be applicable. You need not have a fresh demand order. Okay, already I have raised it for 15 lakhs. Now you need to pay only 12 lakhs. I need not serve you a fresh order. The same order is applicable. Okay, இது எல்லாமே இப்ப மாறுது because of faceless assessment, but generally for your understanding, where demanded quantum is increased, then appellate authority will raise a demand notice only for the increased quantum. Okay, the appellate authority will raise a demand order from 15 lakhs if it has become 20 lakhs. In the question, okay, it is initially 15 lakhs. Okay, so I have, and the interest obligation is 1%. Subsequently, the demand is reduced to 12 lakhs. Should fresh demand order be issued? Not necessary. The old demand order is sufficient. In case if the demand is increased to 20 lakhs, for the 5 lakh portion alone, raise a fresh demand. For the 5 lakh portion alone, raise the fresh demand. Okay, this is interest under 220, and again it is payable within 1 month. If not, 1% interest like 234B is applicable. So interest related questions can be 234A, 234B, 234C, 234D, where excess refund has to be withdrawn, 234E for TDS returns not filed, and 220 where demand notice has been raised on you but you have not paid the demanded tax within the time, then the interest becomes payable, a simple interest only. Within 30 days you are supposed to pay the demanded amount. Okay, interest enough. Since assessment cannot be tested much other than faceless assessment, faceless appeal, probably they'll try to test on these small areas. I want you to be comfortable on these small areas. So that's why I gave it to you. Okay, what is refund? Who is eligible for refund? Should refund be claimed? What happens if refund due to A is due to any order of appeal? Write note on interest on refund. Who is eligible for refund? One who has paid more tax than what he is required to pay. A person for whom tax has been deducted or he has paid more tax than what he is required to pay. Please remember, refund should be claimed. Income tax department will not tap your door and give you the refund. Refund needs to be claimed. Okay, refund needs to be claimed. Okay, friends, refund is applicable for the assessee who has paid tax or on whom behalf TDS is paid exceeds the amount payable. Every claim of refund should be made while furnishing the return. Where refund is due to appellate order, then assessee need not make any claim because if you have gone on an appeal, AO is bound to give that refund. Interest 0.5%. Interest is 0.5%. Where the refund is due to excess payment of advance tax, TDS or TCS from 1st April. Where assessee is eligible for interest of 0.5%, okay, from the date of filing self-assessment tax if it is due to, from the date of filing if it is due to self-assessment tax. Two things, if it is due to TDS or advance tax from 1st April, you paid excess self-assessment tax, from the date of self-assessment tax only interest will be computed. Okay, okay, right, okay. So again, I have not seen a question, but on a safer side, I am writing these things. On a safer side, I am writing these things so that you are not missing out if at all. With allowance, if you listen, that is more than sufficient. So, refund 0.5%. Refund extra I have provided. So, give me back that money. That is also 0.5%. Refund is also 0.5%. Excess money, I have refunded excess, so give me back is also 0.5%. Two cases of 0.5%. Then the third case is all other interest are almost 1%. 234A, 234B, 234C, okay, and 220 are all 1%. Only 234E is 200 per day. Okay, interest will not challenge you. If there is a question, go ahead and take it up, that question. It will not be of much challenge to you. It will not be of much challenge to you. 1 minute. Friends, that leads me to one other arena. There are two questions, legal representative and legal hire. I'll come to that because I want to complete assessment of individual and take it up. Okay, so because assessment of firm, trust, companies, okay, getting over, assessment of individuals, again a very rare questionable area in our final level. That too, if there is going to be a question, optional tax return is the question. But on a quick basis, if we can understand, on a quick basis, if we can recollect and understand, you will feel little confident. Okay. So that's why I am taking assessment of individuals now. Okay, as we answer assessment of individual, I'll answer that questions which are legal representative, etc. Those questions. Okay. Whatever possible, we will do it now. The rest we will do it in the evening, so that I get some time to talk about some of the areas, extra areas, uh, which will be useful for your examination. Assessment of individuals. We start to just do a salaries question just on an overall basis for you to understand. Okay, right? Question number 1. Abhiprita provides you the following particulars of her income for the financial year 2021. Basic salary, HRA, rent paid in Chennai, employer and employee contributes 14% to basic pay, employer and employee contributes 10% of basic pay to pension fund, motor car provided by the company along with driver 2000 cc's which you uses for personal as well as official, 2400 is the perquisite for car, 900 for the driver. Okay, and if it is less than 1600 cc, 1800. She owns 3 different houses, all the 3 are self-occupied. She can claim the benefit of self-occupation only for 2 houses. From Finance Act 2019 onwards, 2 houses you can claim self-occupation. 1 house is deemed to be let out. Municipal value of house 1 8 lakh, house 2 12 lakh, house 3 15 lakh. 10% of municipal value is paid as municipal taxes. She pays it half yearly. Abhiprita sold her ancestral family property, which she has inherited along with her brothers. The said property was purchased in 1970 for 3 lakhs. Fair market value is 1.2 crores. Stamp value is 1.1 crore on 1/4/2001. She gets 30% of the property. All the inheritors together decided to sell, and the sale fetched 4.2 crores. She seeks your opinion on taxing it in her own hands. It will be taxable in her own hands only. It will be taxable in her own hands only. It is not AOP. It is not AOP. It is own hands only. She received the following gifts. From her grandparents, jewelry 60,000. From her parents fixed deposit in her name 1 lakh, relative. From her friends vehicle, it is not a specified asset. Movable property consisting of jewelry, work of art, architecture, painting, bullion are all okay, but vehicle is not as, so that is also not taxable, but this painting will become taxable. This painting will become taxable. She purchased shares of an unlisted company. On analysis, it is identified that the net worth of the company is 75 lakhs and the company has issued a capital of 10 lakhs divided into 1 lakh equity shares of 10 each. Compute her income and the tax due. Compute her income and the tax due. Okay. Computation of income, computation of total income. Salaries, basic pay, okay. The question says 60,000 per month. So 60,000 into 12, 7 lakh 20,000. HRA received 25,000 per month. HRA received is 25,000 per month. 25,000 per month less exempt under section 10 subsection 13A. Actual received, okay, 3 lakhs. Rent paid minus 50%, sorry, 10% of salary. Rent paid is 25,000. 25,000 into 12 minus 10% of salary into 10%. Okay, rent paid minus 10% of salary, 50% of salary since the accommodation is in metro into 50%. Okay, whichever is less is exempt, my dear friends. Whichever is less is exempt. The minimum of these three things is exempt. So the taxable component will be 3 lakh minus 2 lakh 28,000. 3 lakh minus 2 lakh 28,000. Repeating, HRA received 3 lakh, exempt is actual received, rent paid minus 10% of salary, 50% of salary, whichever is less, and the remaining is taxable. The remaining is taxable. Okay. Employer and employee contributed 14% to basic pay. Okay. Employer contribution in excess of 12%, that becomes always taxable. So 7,20,000 into 2%. Okay, into 2%. Actually, how much did employer contribute? Idhila 14% he has contributed. He has contributed 14%. I am writing this for one particular purpose. I will tell you. Idhila 14% he has contributed. Employer contribution to pension fund at 10%. Employer contribution to pension fund at 10%. Okay. So he has contributed 10%. Okay. Total employer contribution has not exceeded rupees 7,50,000. If you remember, in the amendment we did, that if the total employer contribution exceeds 7,50,000, there is that excess will be taxable. So in this case, fortunately, the total employer's contribution has not exceeded 7,50,000. It is only 1,72,000. But anyhow, this way later I will give you an exemption also. Okay, later I'll give you an exemption also for the pension contribution, right? Okay. Motor car provided measuring 2000 cc, which is used for both official as well as personal purpose. Perquisite value of motor car. Perquisite value of motor car, my dear friends, 2400 into 12. Okay, 2400 into 12. If it is less than 1600, 1800 rupees, sir, அதெல்லாம் நான் ஃபைனல்ல ஞாபகம் mostly I haven't seen, but once I am putting it into your mind, suppose in the examination there is a surprise in the name of such question, somewhere it will be there stored in your mind when you listen to this lectures, so that you can go and write it. Okay, so is it with driver? Motor car provided along with driver. PV, perquisite value of driver, 900, whatever may be the CC, it is 900 into 12. Whatever may be the CC, it is 900 into 12. Okay, right? Okay, so that takes care of a salary. That takes care means in a different manner. Gross.
Sir,
Raja.
sir, rent paid 26,000 per month. 25 number.
Thanks, Raja, for correcting. Thanks for correcting. Yeah. Gross salary. $9,06,000 deduction under section 16 subsection 1, that is nothing but standard deduction. Okay, 50,000. So the taxable salary will become 8,56,000. The taxable salary 8,56,000. The taxable salary 8,56,000. Suppose ஒரு இதுக்காக சொல்றேன், optional tax regimeல you cannot claim this 2,40,000, you cannot claim this 50,000. In optional tax regime, if the assessee opts for optional tax regime, you cannot claim HRA exemption, you cannot claim standard deduction also. Okay, now going to house property. Okay, assessee is eligible to claim the benefit of self-occupation for, okay, 2 house properties. Okay, benefit na enna, because NAV is nil. Okay, assessee, so no taxes. Okay, assessee can claim the benefit of self-occupation for 2 house properties, where assessee claims for more than 2 houses. 2 such houses will be self-occupied, okay, and the balance will be deemed to be let out. Okay, the benefit is only for 2. If you claim it for more than 2, the other properties will be deemed to be self-occupied. Assessee has the option to choose. So what I will do as an assessee, that property which has a lesser NAV, I will take it as a as deemed let out. That property which has a lesser NAV. Now when I go to the question, she is a owner of 3 houses, 12 lakhs, 15 lakhs. These are higher Okay, so I will consider those two as self-occupied and house 1 as deemed let out. In the given question, H2 and H3 will be self-occupied and H1 will be deemed to be let out. Okay, municipal value, okay, which is nothing but the GAV 8 lakhs, which is nothing but the GAV 8 lakhs less municipal taxes paid. It should have been paid. I think she has paid, which she pays annually. 10% of municipal value and she pays also. So into 10%. Okay. So it leads me to net annual value. It needs me to net annual value. Okay. Then standard deduction at 30%. Even in the optional regime, standard deduction can be claimed. Standard deduction can be claimed into 30%. Only interest on borrowed capital cannot be claimed. So my house property fetches me, okay, 5,04,000. My house property fetches me 5,04,000. Okay, that income taxable is 5,04,000. Okay, then comes, okay, sale of Roman 3. Okay, capital gains. Okay, where property is inherited and the shares are determined. And the shares are determined. She is very clear. She gets 30% share. Okay, then the co-owners are taxable in their individual capacity and not treating them as AOP and not treating them as AOP. So what happens? Full value of consideration. Full value of consideration. Okay. The total, first we will compute total and then I'll share 4 crore 20 lakhs. 4 crore 20 lakhs. Okay, less ICOA. Less ICOA. I am not writing. You can only take stamp value as on 1/4/2001 because stamp value is lesser than fair market value. So I think it is 1 crore 1 lakh 10 lakhs. Okay, 1 crore 10 lakhs into, okay, 301 by 100. Okay, is the inheritance before 1/4/2001, which has moved the offset property is the fair market value of Biprita. Okay, they have not given the date of inheritance, so we assume that because the question is not about Manjula Jesha, the question is more about this AOP and how it is computed. Okay, LTCG. Okay, so this is the LTCG. Okay, Biprita share at 30%. Okay, her share at 30% will be this into 30%. Okay, this into 30%. This is her capital gains. Okay, which will be taxable at 20%, even in the optional tax regime. Only the normal tax rates are different. Special tax rate, even in optional tax regime, remains to be the same. So this will be taxable at 20%. Roman 4, other sources. Roman 4, other sources. Okay. Okay. Gift received. Gift received from grandparents, parents, are not taxable because relatives. gift of vehicle not taxable because it is not a specified asset. Okay, gift of painting from cousin taxable as it exceeds rupees 50,000. So once it exceeds, the entire 75,000 becomes taxable. The entire 75,000 becomes taxable. Okay, let us check for inadequate consideration on purchase of shares. Let us check for inadequate consideration. NAV of shares on the date of NAV, net annual value of shares. Okay, 75 lakhs is the company's net worth. 75 lakh is the company's net worth, and the company's shares are 1 lakh shares. So, okay, 75 lakhs divided by 1 lakh shares, it makes it 75. Number of shares acquired by Bibrita. Okay, number of shares she has acquired is she has purchased 10,000 shares. 10,000 shares. So value as per NAV, net asset value is 10,000 into 75, 7,50,000 less consideration paid. She has paid a consideration of only 2,10,000. She has paid a consideration of only 2,10,000. So the remaining is inadequate consideration which exceeds 50,000. So the entire inadequate consideration becomes taxable. The entire inadequate consideration becomes taxable. So her IFOS income comes to 6,15,000. You can do these things as working note and take it to the main answer also. No issues. But I have done it on a continuous basis. So her IFOS income comes to 6,15,000. So gross total income. Gross total income is 46,42,000. Gross total income 4642. Deduction under chapter 6A. Okay, deduction under chapter 6A. Section 80C, which you cannot claim, when you are opting for optional tax regime. Own contribution to PF, 14% of basic salary. Okay, own contribution to PF, your basic salary into 14%. Your basic salary into 14%. Own contribution to PF, 14% of basic salary. Own contribution to pension fund, 80 CCD part 1. Okay, up to 10% allowed. So you are only computing 10%. Okay, so 7,20,000 into 10%, 72,800. So this total comes to 1,72,800. Okay, restricted to, okay, 1,50,000. You cannot claim under 80C beyond this, whereas section 80 CCD part 2, which you can claim even under optional tax regime, 80 CCD part 2, 80 JJAA, இது ரெண்டுமே claim பண்ணலாம், no problem. Okay, 80 CCD part 2. Employer contribution to pension fund up to 10% allowed. So employer has only contributed 10%, no problem. He has not contributed more. 72,000. Employer contribution to pension fund allowed. Okay, right? Okay, so total income is this amount 44 lakh 20,000. 44 lakh 20,000. I don't mind taking a small time to explain you in this question how 115 BAC, okay, will apply. So a small time we will take, okay, income under 115 BAC. Okay, I will work out in the style in which in the future they might work out. I will take the total income 44 lakh 20,000. Okay, and what cannot be claimed? Okay, deduction under 80C. Deduction under 80C, you cannot claim. Okay, minus of minus. So I added 1,50,000. Okay, deduction under 80C, you cannot claim. Okay, whereas gift no problem illa, capital gains no problem illa, house property la standard deduction நீ claim பண்ணலாம். இங்க salary standard deduction salaries la vara HRA you cannot claim. You cannot claim. Okay, standard deduction under section 16 you cannot claim 50,000. Okay, HRA exemption you cannot claim. Okay, HRA exemption you cannot claim, that is 2,40,000. 2,40,000 you cannot claim. Okay, total income under 115 BAC. Total income under 115 BAC would be 48,60,000. Okay, now let us compute both the taxes. Okay, computation of tax. Okay, tax as per normal provisions. Tax as per normal provision. Income taxable at normal rates. Okay, LTCG taxable at 20%. So LTCG taxable at 20% it is coming to 26,66,67,000. So income taxable at normal rates will be 4420 minus 2667. So this will be this minus 10 lakhs into 30% plus 1,12,500. Repeating, 7,53,000 into 30% plus 1,12,500. This will be into 20%. So you will get, okay, and HEC at 4% and HEC at 4%. Okay, total tax payable under normal regime. Total tax payable under normal regime will be 9,06,672. 9,06,672. Ana, when I go for computation of tax under, okay, tax as per optional tax regime. Okay, tax as per optional tax regime. Okay, here it will be LTCG will be the same amount, whereas income taxable will be normal rate 4860 minus 2667, and here it will be, okay, or I'll write it fresh. Okay, 2193 minus 15 lakhs into 30% plus 187,500. 187,500. Okay, you will get here. Okay, under optional regime a higher tax because you are foregoing exemption. You are foregoing exemption. So normal tax regime is better. Normal tax regime is better. Question number 2. Mr. X was carrying on a business as sole proprietor, died on 31st March 2020. On his death, the same business was continued by his legal heirs by forming a firm. There was an accumulated loss till 31st March 2020. For the year 31st March 2021, the firm made a profit. Analyze whether the loss can be brought forward. Yes. See, if there is a single legal representative, that representative can take the whole of the loss. But 2, 3 sons, or if there are multiple legal representatives, wife and son, spouse and sons. Okay, so if there are multiple legal representatives, how to claim the loss? They will form themselves into a firm so that the loss can be carried by. Okay, the only condition is the same business should be continued. The same business should be continued, otherwise they cannot claim it. Okay, if they do some other activity and want to claim it, it is difficult. If the same business is continued, they can. Okay, okay, where the same business is continued by legal representatives after death of an assessee, the loss can be claimed, carry forward and claimed. Where there are more than one legal head, they should form as a firm to carry forward the whole of such loss. Okay, they should form a firm and carry forward such loss. It is acceptable. Mr. Vamana, a resident Indian aged 61 years, provide you the following particulars of his income. Compute total income and tax due. Salary received, we should provide standard deduction. Professional tax allowed as deduction. Both are not allowed if it is otherwise. Loss from business which is not speculative or specified. Business loss can be set off against any income other than salaries. Winnings net, we will gross it up to 1 crore, it is 30% tax. Expenses incurred will not be allowed. Loss in card games will not be allowed. He sold the following listed shares during the year. 11,000 shares of Realty Limited purchased in 2017 for 1,850. Okay, these shares were sold for the 31st January value is 2,300 per share. Transaction is through recognized stock exchange. This is because his STT is paid. 15,000 shares in Plural Limited purchased in March 2018. அப்போ எனக்கு market value வேண்டாம், இந்த 31st before 31st January purchase பண்ணியிருந்தா தான் market value for 2,150 and sold 3,000 through recognized stock exchange. 1,000 shares of Alpha Limited, okay, not through recognized stock exchange, which means no STT is paid. No STT is paid. Okay. Okay, right? Okay, we will we'll complete this question and take the break. Okay, question number 3. I will work out first the capital gains. Okay, working note for capital gains. I will first work out capital gains. Okay, working note for capital gains. Particulars. Okay, what are all the 3 companies? Realty, Plural and Alpha. Okay, Realty Limited, Plural Limited, Alpha Limited. Okay, right? Nature 112A, 112A, 112 because STT is not paid in the last case. STT is not paid in the last case. It will be only 112. எதுக்கு இத எழுதுறேன்னா அதுக்கு indexation வரலாம். I will check whether it's a long term capital asset, otherwise I will change. Okay, right? Full value of consideration. Full value of consideration. First, the Realty Limited, 11,000 shares of Realty purchased for these are sold for 3,150 per share. So 11,000 into 3,150 less COA. What is COA? Okay, step 1. Full value of consideration or FMV as on 31/1/2018. Okay, less COA since shares are purchased before 31/1/18. There are 2 steps. Okay, FMV as on, okay, whichever is less. Step 2. Answer of step 1 with actual cost, whichever is higher. Now let us do, okay, now let us do, I have sold it for 3,150, 3,150 or 2,300, whichever is less. 3,150 or 2,300, whichever is less, 2,300. That answer with 1,850, whichever is higher, 2,300 is cost of acquisition. Majority of the time, 31/1/2018 value will be higher. 31/1/2018 value will be higher. So 11,000 shares into 2,300. 11,000 shares into 2,300. So my gross LP, okay, that I'll do last. Okay, okay, 2,53,000. Now less COA, Plural Limited, shares purchased after 31/1/18. So direct because what is the date of purchase? Okay, 2000 sold. These shares were purchased, okay, 1st March 2018. It is purchased after 31st 1/2. So I need not look into this. I need not look into this. This is an irrelevant information for me. Okay, when it is purchased after 31/1/18, it becomes an irrelevant information for me. So 15,000 into 3,000. Okay, 15,000 into 3,000, and the cost will be okay, and the cost will be 15,000 into 2,150. Okay, 15,000 into 2150, and the cost will be 15,000 into 2,150. Now let us look into the third case. 10,000 shares of Alpha Limited are acquired on 1st March 2020 for 2,300, sold within, I want to wait and see. So it is sold within 12 months. It is sold, but it is not sold through stock exchange. Sorry, it is not 112. It is not 112. It is a normal short-term capital gain. Okay. So what happens here? 10,000 shares. Okay, 3,000 is the sale value. 10,000 into 3,000. Okay, 10,000 into 3,000. Okay, this will come here. Less COA of Alpha Limited. It is a short-term capital asset as it is sold within 12 months. In fact, within 24 limited. Okay. Okay. So it is 10,000 into 2,300. Okay. 10,000 into 2,300. Okay. LTCG taxable under 112A. LTCG taxable under 112A or all reality and plural. Okay. So these two are taxable under 112A. STCG taxable at normal rates. It is not STT paid, so it is taxable at normal rates. Okay, minus. Okay, this is STCG taxable at normal rates. It is STCG taxable at normal rates. Remember. So, first two, reality and plural, or long-term capital asset sold through recognized stock exchange. So, STT would have been paid. Alpha Limited is not sold through recognized stock exchange and it is sold within 12 months. So, it becomes a short-term capital asset. It becomes a short-term capital asset. Computation of total income. Computation of total income. Okay. It's not continuing. Computation of total income. Gross salary. 29 lakh 40,000. 29 lakh 40,000. Okay. Deduction or standard deduction 50,000. Okay. Professional tax. Both will not be allowed under optional regime. 12,000 by employer are not allowed. Sorry. Professional tax. Okay. Not allowed since it is paid by employer. There is one other way. You need to add it to the gross salary and reduce it. The impact is the same. The impact is the same. There is one other way. You can add it to the gross salary and reduce it. add it to the gross salary as per percent, or just ignore it. Both are giving you the same impact. Okay, either add 12,000, reduce 12,000, or as it is, leave it. Okay, when it comes to business or profession, okay, there's no house property, business or profession. Loss from business, which can be set off against STCG. In the STCG 70 lakhs, it can be set off. It cannot be set off against salary income. Okay, loss from business, which is coming to 2,20,000, which is not a speculative or specified business. So you can set it off against STCG. நம்ம STCG ஓட set off பண்ணிக்கலாம். Okay, right? Capital gains. Okay, LTCG under 112A, LTCG under 112A, 9350 plus 12750. இதுல இன்னும் ஒரு கன்ஃபியூஷன் இருந்துதான் இருக்கு. At what அந்த 1 lakh எப்ப டிடக்ட் பண்ணும், while computing tax or while computing income ஆனு. Okay, where it will have an impact is அந்த surcharge வந்ததுன்னா அதுவும் marginal reliefல போயிடும். So as of now I will reduce it while computing tax, but that small dispute is there where it has to be it is exempt, so it should be reduced in income no or argument இருக்கு. It is only for tax computation under 112A, so it should be reduced while computing tax, no argument இருக்கு. But anyhow, they will not go into STCG normal. Okay, 70 lakhs. Other sources. Okay, other sources. Winnings, gross, nothing but 70,000 divided by 70 into 100. 70,000 divided by 70 into 100, 1 lakh. Winnings, gross 1 lakh. Okay, expenses not allowed, loss not allowed. Okay, expenses and losses are not allowed. Okay, okay. Anything else? Salary, professional tax, loss, winnings, expenses, listed shares sold. Okay, now I get gross total income slash total income. I don't have any deduction to claim. Okay, gross total income slash total income. It exceeds 2 crores, including these two. Okay, right? I will do the surcharge, you will understand it. Okay, so 3 crore 18 lakh 70,000. Please wait. Computation of tax. LTCG taxable at 10%. What happens is 2,21,000 minus 1 lakh. Okay, 2 crore 20 lakhs. Winnings taxable at 30%. That is another 1 lakh. Other income taxable at normal rates. How much is that? 3 crore minus 220 minus 1 lakh minus another 1 lakh which I have reduced in okay, 9670. 9670. If you take this total, it will come to 3 crore 17 lakh 70, because in this 3 crore 18, 1 lakh is not taxable, so I have taken like this. Okay, now what is the rate of surcharge? If we go to the table and understand, more than 50 lakhs, less than 1 crore, 10%. more than 1 crore, less than 2 crores, 15%, where income excluding 111A and 112A exceeds 2 crores, 25%. But here it is only by including we are getting it. So surcharge is 15%. Surcharge is 15%. Repeating, if I exclude this, still if the income is more than 2 crores, on that income 25% and on this income 15%. But here is a case, by including this only it has exceeded 2 crores. So surcharge is that simple rate of 15%. So this into 10%, this into 30%, this minus 3 lakhs senior citizen into 10 lakhs into 30% plus he is a senior citizen, so it is 1,10,000. He is 61 years old, so 3 lakhs first 2 lakhs into 5%, so 10,000. So he will get 27 lakh 11,000. Okay, total tax and surcharge at the rate of 15% as income exceeds rupees 2 crores only by including 112A. Only by including 112A. So into 15% and HEC at 4%. Total tax payable TDS லாம் இருக்கு, அதெல்லாம் different, but this is the total tax payable. Suppose optional tax regime, this would have gone up by 50,000. This would have gone up by 50,000. The other rates would have remained constant and you would have done it. The optional tax regime might be better because of the small difference of 50,000 only. But this is how it has to be worked. Okay. I took up this question to tell you LTCG how this security transaction paid LTCG will be working out. Am I clear to you? Okay, right. We stop the morning session here. We continue assessment of individual and some more items in the evening session. All the very best.